Students, in this class we are going to learn a problem in relation to normal dissolution of partnership firm. If we want to dissolve the firm, all partner voluntarily they should agree. First condition. Second condition is the firm is able to repay the external liabilities. The firm is able to pay its external liabilities such as creditor, bills payable, bank loan and partner loan. Okay, look at the problem. Ram, Rahim and Suresh share profits in the ratio of 3:2:1. On 31st December 1994, their balance sheet was as follows. Liabilities, assets. Creditor, reserve, capital, Ram capital, Rahim capital, Suresh capital. Asset side, machinery, stock, debtor, goodwill and bank. The values which are given in the balance sheet we should term as book value. The values which are given in the adjustment called adjustment value. Okay. On the above date, the firm was dissolved. So on 31st December 1994, they decided to dissolve the firm. The assets except cash realized 60,000. So all assets they realized for rupees 60,000. So we need not to realize the cash or bank. Yes. The creditor book value 12,000. The creditor were settled at rupees 11,500. So total amount payable to creditor rupees 12,000, but actually they paid 11,500. Then dissolution expenses came to 800. Liquidation expenses came to 800. Give necessary ledger account. We have to prepare 3 ledger account. First one is realization, second one is capital, third one is bank account. Bank account and cash account both are same. Yes. First we have to prepare realization account. We have two sides, debit and credit. First we should transfer all assets except cash to the realization account. The entry for transfer of assets to realization is realization account at all assets. Realization account at to all assets, namely machinery, stock, debtor, goodwill at book value. Goodwill should not be transferred to the capital account, it should be transferred to the realization account. So first we have to record one entry for the transfer of assets to the realization. The entry is realization account to all assets except cash and bank at book value. So first I have to transfer machinery to machinery. Machinery value, book value 25,000. Then stock book value 11,000. Then debtors book value 9,500. Then goodwill should not be transferred to the capital account, it should be transferred to the realization account. Its value 13,000. So first entry, all assets should be transferred to realization account except cash. So asset transferred to the realization account. Then we have to realize these assets by bank. When we sell all assets, it should be recorded in the credit side. Further, the entry is bank account data to realization. Here, the assets except cash realized how much? 60,000. So the first entry, realization account data to all assets except cash at book value. Second entry is on realization, bank account data to realization. So for assets there are two entries. One is transfer to realization, another one is on sale. The second entry is bank account data to realization. Then we should consider external liability. External liability already I said creditor, bills payable, bank overdraft, bank loan and partner loan. Here we have only one liability called creditor. Reserve should be transferred to the capital account. Capital should be transferred to the capital account. So we should transfer external liability creditor to the credit side of realization account by creditor. By creditors. The book value of the creditor 12,000. Then so when we transfer external liability to the realization, entry is creditor account data to realization. Then we are going to settle the external liability. Further, the entry is realization account data to bank. So we are going to settle the creditor. The creditor were settled at rupees 11,500. It will be given in the adjustment. So book value, the value given in the balance sheet called book value, the value given in the adjustment called realized value. Then dissolution expenses. The entry is realization account data to bank. Relation account data to bank. This is realization expenses. Value 800. What I did first, I transferred all assets except cash to the relation. Entry is relation account data to all assets. Then I realized assets. So bank account data to realization. It will be recorded in the credit side of relation account as by bank. I recorded realized value given in the adjustment. Then I transferred all external liability to the credit side of relation account. Then I recorded to bank, that is the payment made to the creditor. Then one more entry in relation to relation expenses, that is relation expenses, relation account data to bank. Then I have to balance this relation account. Then I have to balance the relation account. In this problem, credit side total 72,000. Relation credit side total 72,000. Debit side total will add 25,000 plus 11,000 plus 9,500 plus 13,000 plus 11,500 plus 800. So our credit side total is 72,000. Debit side total is 70,800. So debit side total is lesser than the credit side. So the difference 1,200 recorded in the debit side as to a realization profit. In this problem, credit side of relation account is heavier than debit side. So relation profit recorded in the debit side. Sometimes the debit side value heavier than credit side. That time relation loss recorded in the credit side. First, we should divide this relation loss among the Ram, Rahim and Suresh in the ratio of 3:2:1. So relation loss shared by Ram capital, Rahim capital, Ram capital, Rahim capital. Next one is Suresh capital. So 1,200 divided in the ratio of 3:2:1 into 3 divided by 6. 1,200 into 2 by 6. 1,200 into 1 by 6. 600 to Ram, 400 to Rahim, 200 to Suresh. So what I found first, relation profit. I transferred the relation profit to the all partners. Then we'll move to capital account. First we'll transfer capital to the capital account in the credit side. By balance BD. By balance BD, Ram capital 20,000, Rahim capital 15,000, Suresh capital 10,000. Then we should transfer general reserve to the credit side of capital account. It should be divided in the ratio of 3:2:1. So by reserve, it should be divided in the ratio of 3:2:1. So total reserve is 3,000. 3,000 should be divided in the ratio of 3:2:1. So 3,000 divided by 6. 3,000 divided by 6. 500. 500 into 3. 1,500. 1,000 and 500. So first I transferred capital to the capital account. Then I transferred reserve to the capital account. In this problem, if profit and loss account given in the liability side, it should be transferred to the credit side of capital account. It should be divided in 3:2:1. Sometime the profit and loss account given in the asset side, it is loss, it should be transferred to the debit side. To profit and loss account, it should be divided in 3:2:1. So I transferred capital and reserve. In this problem, profit and loss account is not given. Then the relation profit transferred to the partner's capital account, it should be recorded in the credit side by realization. By relation profit, 600 to Ram, 400 to Rahim, 200 to Suresh. We transferred relation profit to the credit side of capital account. If it is relation loss, it should be transferred to the debit side of capital account of all partners. Now we will balance the capital account of all the partners. We'll balance the capital account of all partners. 20,000 plus 1,500 plus 600. 22,100. So the balance of partner's capital should be transferred to bank account or cash account. For this, the entry is realization account data to bank. Ram's capital account data to bank. The narration is Ram paid off. Students, this is surplus funds available for RAM. We have to record entry for this. The entry is RAM capital account to bank 22,200. The narration is excess money paid to RAM. Then we have to close Rahim 16,400. 16,400. For this, entry is Rahim capital account to bank. The excess surplus funds paid to Rahim. Then we have to close Suresh 10,700. 10,700. For this, the entry is Suresh capital account to bank. Surplus funds paid to Suresh. Then at last we have to prepare bank account. It should agree. At last we have to prepare bank account or cash account. First we will take opening balance of bank. To balance PD. Opening balance of bank value 1,500. Opening balance of bank 1,500. So open bank account, debit side, credit side. In debit side write to balance BD. Then look at the realization account. In debit side we have bank for the creditor paid. One more bank, realization expenses. One more bank in the credit side, that is realization of asset. So the debit bank here recorded as by realization. So first one is for payment made to the creditor by realization. By realization, the value 11,500. Then second bank, it is for realization expenses. It will be recorded in the credit side of bank account as realization. Value 800. Then in credit side, on sale of all assets, in bank account it should be debited as realization. Realization 60,000. So debit side we have two bank. It should be recorded in the credit side of bank as realization. Credit side we have one bank. It should be recorded in the debit side of bank account as realization. Then move to the capital account. Here search and get the bank account. No bank, no bank, no bank. Here we have bank. Bank debited. The entries are Ram capital, Rahim capital, Suresh capital to bank. So here bank credited. So go to the credit side, write by Ram capital 22,100. Then by Rahim capital 16,400. At last Suresh capital. At last Suresh capital value 10,700. Students, now the bank ledger account should agree. Then only our problem is correct. 61,500 debit side total of bank. Go to the credit side, 11,500 plus 800 plus 22,100 plus 16,400 plus 10,700. So the total bank in the debit side 61,500. Credit side total also we got 61,500. Students, we completed first problem in relation to normal dissolution of partnership firm. The second problem we'll learn in the next class. Till then, bye and thank you.